Hi everyone, welcome back to Bearish Podcast. It's me, Vinod, and Arun here today. I think from now on, I should make Arun do the intro to get him more loosey-goosey on the channel because he seems to be very uptight. He's constantly imagining there's like a million people in front of him sitting there and he's addressing all of them and he kind of freezes up and he chokes up. So I think from now on, I'll make him do the intro and I'll answer the questions. So maybe it'll get him a little more talkative on this podcast. Otherwise, he seems to be rather quiet. And if you guys feel otherwise, comment down below and we'll look into that. Right, Arun? So today, on a follow-up of yesterday's question, which I wanted to clarify was, yes, you need to have 100 shares of IDFC to be eligible for IDFC first when that merger happens. If you only have 99 shares, you would not get 155. What will happen is the 99 shares will be destroyed and that day's market value of IDFC will be multiplied into 99 and that amount will be paid into your account.
Okay. So we should buy that balance amount of shares. Correct. Or we should ignore that.
And let's say you have 105 shares. Let's say you have 102 shares. 100 will get converted. The remaining 2 shares will be multiplied into that day's market price and be credited to your account.
Okay. So
you're not going to get 157, 156 and all that will not happen. That ratio stays gold. Okay.
So when they announce a merger date, will it be converted on that or listing?
It will be converted on that date. They'll give you time. On that day, they'll say on October 23rd, it is happening.
Okay.
So it gives you that much time to get your stuff together. It will not happen like it's happening tomorrow. They will announce it like that.
Okay.
So it gives enough time for investors to figure out their stuff. So if you're like 195 shares you're holding, maybe you should buy another 5 more shares. When you want to buy it, how you want to buy it, it's up to you.
So it's better to get the round of figures what they have mentioned.
That is if your goal is to get those shares.
Yeah.
Okay, I do not know your goal. Okay. Why you bought those IDFC shares, I do not know. But if your intention is to get those 155 shares, every 100 shares will get you 155 shares. So a multiple of 100 will work.
Okay.
If you have 298 shares, then if you want to make it 300, make it 300. So you get 3 times 155. So think about that and invest accordingly.
Okay.
I'm not telling you to do it or not do it. That is completely up to you. Based on what your goals are, what your beliefs are. And if you think Vaidyanathan is a good promoter running the company, then you decide. If you believe in what Vaidyanathan does the way he does, then you can hold on to it. Or even if you don't exit and you have 99 shares, you'll be forced to exiting the position because those shares will be destroyed. So that is as far as IDFC is concerned. I hope that clarifies any doubts people have had. What is today's question?
This person has asked about Bajaj Finance. So what is the difference between Bajaj Finance and Bajaj Finserv? So both of them are doing similar kind of business. What is the difference between both?
Bajaj Finance is a subsidiary of Bajaj Finserv. Right? Under Bajaj Finserv, you have Bajaj Finance, Bajaj Alliance Life Insurance, you have Bajaj Alliance General Insurance and other things. All owned by Bajaj Finserv. Right? And Bajaj Finance is a NBFC. Non-banking financial company. And what do they do? Mainly loans, consumer durable loans, personal loans, home loans, business loans, and fixed deposits. This is what comes under Bajaj Financial. It's an NBFC. And the target market is any individual who's looking for a personal loan, business loan, home loan, consumer durable loans, medium, small enterprises, and in looking for investors with high return investment options like fixed deposits. People are looking to put fixed deposits in, they can look for it. They offer marginally higher interest rate than maybe a bank does. So that is the main thing of Bajaj Finance. Meanwhile, Bajaj Finserv, what does it do? They act as a holding company for Bajaj Group Financial Services, all those which I mentioned. And they operate in lending through Bajaj Financials. They operate in wealth advisory sector and insurance. So people are looking for Bajaj insurance, in general Bajaj Alliance insurance, Alliance insurance as they say, can go through Bajaj Alliance, which is owned by Bajaj Finserv. The insurance products which includes this life insurance, general insurance, health insurance, car insurance, travel insurance, all those insurance services are under this. And it also has mutual funds and wealth management services under this for corporates and other clients. These are the main differences between both of them. And if you want, there's also another company called Bajaj Holding. So if you see, Bajaj Finance is owned by Bajaj Finserv. And Bajaj Finserv, most of it is owned by Bajaj Holding. So if you look at it, if you as an investor, if you want to hold Bajaj Finance and Bajaj Finserv, instead of buying these individual shares, you can look at Bajaj Holding.
And recently I edited one of MoneyPage videos and Sir mentioned that there is a company called Bajaj Auto Credit, which lends particularly for Bajaj automobiles only. So why is that company is having so many finance companies? They simply
It
can
is
have.
like, it is up to you, like how you arrange the furniture in your house. If it's your house, you will arrange it any way you like.
Yeah.
If I walk inside your house, you'll say, why are you putting kitchen table here? Why are you putting, bed, using that as bedroom? You can use that as office and make this your bedroom.
Yeah.
You'll say, sir, this is my house. I like it like this. You like it, you can see my house and visit me. Otherwise, don't come.
Okay.
Same way, Bajaj is run by the Bajaj family. They feel this is the way they want to run it. You as an investor feel, you believe in their philosophy and you believe in the promoter. And you think that's a great company to invest in. And if the price is correct, right? Most important is the price.
Okay.
If the price is at the right place and it's a value buy, then you can look at it. But to wonder why are they doing like this, you can analyze it in any way you want. You know, yes, it would make a lot of sense if you consolidate, maybe in your opinion. But in their opinion, they're doing value add by creating a separate company, and it's easy for them to manage. They have separate targets, separate goals, and they run with it.
Yeah.
Sometimes it's better to break it into pieces. Sometimes new guy will come to run the company and say, no, this is too complicated. Let me put it all together and make it into one. You see this happening in the Tatas. You'll see it happening in Reliance. You'll see it happening under everything. Like in Reliance, everything is under the Reliance Industries umbrella.
So they feel that running it as a single group will be the better.
Depends. Depends on the promoter. How he wants to split it up. Right. In most Indian scenarios, what happens is, it's run as a family business. The promoter initially would have been one single guy. He would keep everything under one. But as he has children and the children have children, family expands. So then they maybe want to break it into pieces. So each guy runs his own unit separately. But at the same time, they all own each other and they work together. So you have to be careful. But yes, it makes sense. Like the Tata is a 150-year-old company. So Tata and Sons holds a lot of it. But who owns Tata and Sons shares, how they own it and all that, it's very complicated. And one can speculate.
Okay.
Because it's privately held. Information is not public. So it's the same way with Bajaj. But it's a great company if it's bought at the right price. Question is, it is the right price.
Okay.
And like I said, NBFCs are treated as banks. So you should look to price to book and not price to earnings. While other companies, you can look at price to earnings. But NBFCs are treated like banks like Manappuram and Muthoot. So you should look at price to book and see if it's price to book if you're only looking at Bajaj Finance. All right?
Yeah.
I hope that's answered all your questions and inquiries regarding the Bajaj Finance, Bajaj Finserv, and how the Bajaj financial arm of their businesses are structured, and if you should look at it as an option. As I said, Bajaj Holdings also holds most of these companies, so you can even look at Bajaj Holdings if it makes sense to you. Thanks for watching the podcast, guys. And me and Arun will see you in the next one. And Arun will definitely do the intro in the next one. Bye.
Thank you.